Welcome to Stock Market Investing, the ARMOR Report. This is the in-game update. ARMOR Insiders, thanks for joining. You were just looking at the day trading charts that we use using the ARMOR algorithm, what we call the price movement profile of the PMP on all of the indexes. So let's start there, okay? What I wrote to you in the Slack room is that I was getting long the market in the ARMOR index-only portfolio right here, okay? Right there, which coincided to right here for the NASDAQ, which coincided to right here for small caps, and the same thing for the Dow, okay? Now let's go over what the thinking is. Okay, so we added right in here at the Dow. So we're making money across the board on all those positions. Okay, we came into today 100% cash, risk monitor red in the index only portfolio. We went long puts, didn't really make any money there, actually lost a little bit of money there. And we went long AGQ and made a lot of money there. Okay, so our day trading worked. And then when we sold those puts the last time, I flipped and went long. The reason I'm doing it is that I'm looking at two things. Number one, volatility index, which I'm looking at right here. Okay. The VIX is trading. It went above the ATR high of the day, which is this blue line I just highlighted for you, and it reversed. Okay? That's classic. That usually is the end of a rally in volatility. On top of that, I submit to you, and I've been watching closely the price of Bitcoin and Ether. Okay? The market bottomed and sold off hard when Bitcoin and Ether took out the 2 a.m. low, 2 a.m. this morning, okay? When Bitcoin and Ether took out those lows, the market imploded and VIX spiked. Then Ether and Bitcoin recovered, VIX came off, we got long the indexes. Indexes are rallying right now. If the indexes close off the lows here, I may hold those positions overnight in the index-only portfolio in anticipation of what turns out to be an ARMOR risk-on green signal. Let me show you why. We went risk off red a few days ago when we had a 3-bar reversal to the downside that took us right on the S&P to the 50-day moving average and the uptrend. 2-day rallies mean nothing to me. The third day means everything. If the market closes off the lows today, if the market stays above the low of the second day, I begin to lean towards the theory that we're not having a risk-off red monitor collapse that's coming. It's just a continuation of rotation in the market. Okay, I can show you a number of names that look great and that are breaking out in here, not even talking about precious metals. Okay. In fact, I have one name up there on it before we even started talking, and that's Kohl's. I don't even have an interest in Kohl's. And there's a big box retailer in malls that it's gone through a 3-bar reversal and is breaking out. I could build a list of names like that. So I'm leaning towards the belief that the last risk-off red signal was just another shakeout in a rotating market that's trending towards a commodity supercycle. So what I submit to you is that we want to keep leaning into what's working in this market. Commodities, low beta names, high dividends. Those are the three. When I say high dividends, not 7, 8, 9%ers. I'm just saying more than 2%, somewhere between. The sweet spot to me in this market is around 4% dividend yield. If you can get 5 or 6 on a big name like AT&T or IBM or something, you're in tall cotton. Okay. If you can get 3.5 to 4 in big cap pharmaceuticals, those are the stocks that are collecting safe money right now, and the stocks are going up. So this is not a market to overweight high beta. So I want an anchor in the portfolio of lower beta dividend names. So we add today these 4 names this morning. Okay. By the way, we already own AbbVie, and this is showing the way. AbbVie just keeps going up. It doesn't even know the market went down. Market had a shakeout. AbbVie didn't even go below the 9-day moving average. Gilead is coming off of a major bottom. All the bad news is in the stock. Merck, one of the worst performing Dow stocks in the first quarter of the year, is coming off of a major bottom. Take a look at that chart pattern and then go take a look at the money we made in Lockheed Martin. It's the same pattern. A 2 relative strength. Everybody said it was a disaster, blah, 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 all the reasons why it's no good. And all we did was coin money. When I say coin money, we made money in a low beta stock. So the reward to risk to me is very attractive. Same thing here. Final gap down to shake out shareholders on an earnings announcement nobody liked. But it's a higher low and an immediate reversal taking out the 200-day. That's what I'm talking about. Okay, Bristol Myers, same response to earnings, same recovery immediately. Pfizer is a bit of a different egg. The real entry points here, I'm paying up a little bit for it. I'm looking at a major downtrend here. Okay, that major downtrend right here is breaking out. Okay, and we know why Pfizer might be more of a growth stock. So those are the stocks we add right now. Okay. That's the anchor for the portfolio. It goes along with our pipelines, the energy pipelines. It goes along with our Chevron. Then we can move to something a little higher beta if this market turns in here. And as I'm speaking, the market's reversing and going lower. So we might not hold any of those indexes by the end of the day. We'll have to see. Okay. It's not a day trade for me right now. I'm looking to see how it trades. But on the top of my list, it's going to be Illumina. And this is what I want to say to you guys. The stocks that are working for us are armor value entry points. High reward, low risk, coming off of lows. We worked all of our precious metals into the portfolio in early March, right off of those bottoms. And now they're blossoming and paying us in a major way, causing a massive alpha day for us on the upside. I mean, it's fun to make money when the market's going up. But for me, I think it's even more fun to make a lot of money when the market's going down. Those are my favorite days, and we're getting it in spades right now. Okay? Okay? But, so what I want to do for us, and it's so hard to do, but we want to focus on only buying value entry points. Why do we want to do that? Just in case you just have to go over it again. Take a look at the value entry point we bought in Newmont. Okay, this is what we want to repeat in our portfolio over and over and over again and avoid all the other noise. If you're running a swing portfolio, you could book some profits right here on precious metals. I'm not doing that. I think there's massive upside coming and we bought it right, so I'm leaving it alone. But for swing traders, you're hitting targets today. You can take 25% of the position off if you want. Look at Royal Gold. This is where we bought it. Look at Franco. This is where we bought it, right off of the bottom. That's a value entry point to me. High reward, minimal risk, because we know what the stop is. If we can force ourselves to only put on positions like that, we'll reduce the volatility in the portfolio. And then when we earn the right to take the risk, we can add hybrid entry points. So we've made a lot of money in these names already. And that's why I'm talking to you guys about trying to add something like an Agnico Eagle. Okay, the real entry point was here. I didn't want to do that at the time. I chose my other names. But now when we break the downtrend, the hybrid entry is right here. And today's day one of that entry. Today's day one. This is a pennant that formed as it broke out above the downtrend. and you wait for a couple days to see if it's going to hold. And when it breaks out, you put the trade on. That's the hybrid entry point. Kirkland, hybrid entry point. PVG. That's actually a new value entry point. It hasn't even broken out yet. Same with Nova Gold. Those are value entry points. So in light of that, if I wanted to find other names that are value entry points, same with Nova Gold. Those are value entry points. So in light of that, if I wanted to find other names that are value entry points that aren't just precious metals, I submit to you that owning shares of Illumina down here, if the market starts to go up, this is a market stock. It's a NASDAQ 100 name. It's not going anywhere. If the market keeps going down, it's going to follow the market down. But if the market bottoms and we have a double bottom on the 200-day moving average and on the support, that stock should be owned because the risk is minimal. All right. The low of 2 trading days ago is our stop. And the reward's significant if the market starts to head higher. How about FireEye? Right? This is a value entry point. I mean, I can't believe the stock isn't down after what the market's gone through and how other cybersecurity stocks have been treated. So this stock can only go up if the market starts to trend higher. So those are 2 names at the top of my list. Those are value entry points. Could I own shares of X? I could, but it's a hybrid entry, right? I could definitely own Cleveland Cliffs, but and we've made money there. So I'll go back at Cleveland. Before I'll trade X, I'll go back to Cleveland because we booked a profit on that and it held above the 25-day. So I could put that trade back on with a low of Friday as my stop. I could easily do that. That's a legitimate entry point that I would still consider, kind of a value. I mean, if you look at this chart, okay, obviously down here is what you're going to say is the value, right? That's the original value. But when you break out of a huge pattern like this and then you make the new pattern on top of it, I mean, there's no way around it. I don't want to pretend here. That's definitely a hybrid. But it's a hybrid to me, it's worth buying that hybrid. Okay? This is the hybrid entry right in here. And so what we're doing is we'd be buying right on top of it. And let's be honest, we've already booked a profit in the stock. So we're just saying, okay, we booked a profit to protect ourselves. It didn't go any lower. We need to own it. So here in conclusion, what I say is I'm trying my hardest to just focus on value entries because that's what's working. Every now and then we'll add some hybrids. We'll try to add hybrids where we've already earned the right to take the risk because we're making money in value entry points. Okay? For those of you who are risk adverse, you don't do that. If I go buy more gold and silver stocks today, you shouldn't do it if you're risk adverse. You bought it right with me in March. Just make the money you're making. If you're really risk adverse, you're booking some profits up here. Right? Because you don't care about how unbelievable the story is and how these things could go up exponentially. All you care about is swing trading and protecting your profits. And so you sell a third or a quarter of your position to book a profit. Hey, man, there is nothing wrong with that. I have no idea what the metals are going to do next. Yeah, I know. It goes above 28. The whole thing should skyrocket. And so do all of the banks that have a huge short position. They don't want it to go above 28. So they could wreck it tonight at 2 a.m. for all I know. I don't know. I don't think that's going to happen. I think we've gotten to the point where these things are going to go ballistic. For my portfolio, I'm letting it ride. If you're more conservative, you should be booking profits at targets right now and then letting the rest of it ride. It's totally up to you. Okay? Whatever your risk tolerance is and your goals are is how you should run your portfolio. Okay? Those are my thoughts for the day. Cliffs, FireEye, and Illumina. Those 3 could be added to the portfolio. Those are higher beta names if the market closes strong in here. Okay, so I'll see you at 3:30 and I'll let you know. I say I'll see you. I'll update, the Slack room to let you know what I'm doing. All right, we all good? 10-4? 10-4, go, buddy. All right.